Bank of America just got a new #1 customer, or we should say shareholder. Warren Buffett, now the largest holder of BAC, which is moving up 1.75% at this hour. After he made a big trade back during the financial crisis in years ago, 2011, he lent a big chunk of money to Bank of America with the prospect that one day he could cash it in for common shares and make a whole boatload of money. He cashed in yesterday, and that just makes one of the world's richest men now a whole lot wealthier. I sat down with Warren Buffett today at his annual Glide charity lunch here at New York Steakhouse Smith & Wollensky. An anonymous bidder, by the way, paid $2.7 million for the privilege. But you get it now through me. I began with the big move he just made in Bank of America. I know it's on paper, but you just walked into this restaurant today $13 billion richer than you and Berkshire were yesterday. Why now? Why was the time now to exercise that opportunity to cash in on your Bank of America deal?
Well, we had announced, we haven't cashed in the sense we've taken our preferred and warrants and sold them for cash.
Well, that would be cash out.
Yeah, we've exercised warrants and we've used the preferred to do it. And we said we would do that at any time when the common that we would receive would have a higher annual dividend than the preferred. So it was just driven by the economics of the dividend terms of both issues. The common has been increasing its dividend regularly. The preferred is a fixed amount. So the common not only caught up with the preferred, but it went beyond it. So we exercised.
It is not often that I get to say I was right and you were wrong, but in May, I asked you about Wells Fargo, which had many troubles with setting up ghost accounts and really hammering their clients. In May, I asked you, any more ticking time bombs here? And you said, I'm not worried about that at all. They'll be more vigilant. In the past week, we have seen all kinds of issues, and now Tim Sloan, the CEO, says they're about to release their internal review, and it's not pretty.
No. But that does not relate to anything that's happened since Tim took over it. I mean, they are discovering.
I'm not blaming him.
No, I know, but I mean, but when you say they made multiple mistakes, they're paying plenty for it, and then the question is how will they go on? I was at Solomon that when they had mistakes. Everybody has something like that hit. We've had them at Berkshire thing, not on that scale, obviously, but you go forward. You correct what went wrong. You figure out why it went wrong to the extent you can, and you go forward.
You were the lender of last resort during the financial crisis or post with General Electric, Bank of America, Goldman Sachs, Harley-Davidson, Tiffany. Do you see any similarities at all right now to the consistent records that we see hitting for the stock market higher and higher and higher to what we saw with the bubble back in 2006?
No, it's not a bubble situation like it was then. But that would, I mean, here you had a $20 trillion asset class, home ownership, where that's where the big abuses occurred, and when you had trillions of dollars worth of mortgages that a good many of which people thought were AAA, that turned out to be a bunch of junk. I mean, that really changed the economy in a big way. We don't have anything like that I know of.
Encore, you just lost out on that bid to buy Encore, which is a power generation company, power transmission to Sempra Energy. Is there anything you would have done differently with the bid for Encore, which you just lost out to Sempra Energy for?
I don't feel I've lost. I've just said what I would pay, and if it buys it, fine. But if it doesn't buy it, I mean, that happens all the time in securities.
I know you have this long-standing rule that you don't engage in bidding wars, but times do change. Would you consider changing the way you do business when it comes to maybe tweaking a bid?
Well, not in terms of bidding wars. We will pay more for a business when interest rates are at this level than if they were at, say, 8% or some number like that. So there are things that change our valuation. And our bid for Encore was the highest multiple we've ever bid, but that's because interest rates are very low, and we like the property very much, and we like the state very much.
You've had trouble launching a big whale of a company. At some point, are you willing to say that the situation is so different now in landing these gigantor companies that really one of the only options is either to do share buybacks or give the dividends back to your shareholders?
Well, we certainly wouldn't sit there forever just accumulating money that didn't do anything. On the other hand, I think the odds are very good. I mean, I've been through periods like this maybe a half a dozen times. And markets have a way of doing things that surprise you, and we will have times when we can buy things that are attractive.
Do you wish you had thought to buy Whole Foods instead of Jeff Bezos?
No. Well, Jeff knows what to do with it. I don't.
Well,
that's a big difference.
How about an airline? Barron said that you might be in the running for buying a whole airline outright. Southwest, they even mentioned.
Well, we could, if we've got the management to run it, and we think it's a good business. I mean, Jeff is buying Whole Foods to change it.
Right.
We don't buy to change things. The people running them are smarter than we are about running the business. So anytime we see a business we think we understand, and we've got the management that we trust, and they have the ability to run it, and the price is right, we're ready to move.
What goes up must come down. We know.
No, not necessarily. There are things that can go up and up and up and up.
Well, the stock market, we know, eventually comes down a bit. What will you be doing the day the stock market suffers a stumble, a big one?
Well, it probably won't happen in one day. I mean, but but if you hit a period where prices go down a lot, we'll be buying.